Welcome to the Dealreporter podcast. Hello, I'm Juliana Needham. I'm joined by Dealreporter's European Head of Equity Capital Markets, John West, and also by Alex Tarrant, who we'll be talking to later about Nokia and Microsoft. So coming into the autumn, deal activity appears to be picking up. We've seen Verizon complete the biggest corporate bond sale ever, raising a whopping $49 billion to buy Vodafone's 45% stake in Verizon Wireless. That's the US joint venture between Verizon and Vodafone. That deal is going to see £22 billion returned to UK shareholders. Ongoing deals include ENRC's take private, the Publicis and Omnicom merger, and Schneider's planned acquisition of Invensys, and also Atlas Copco's acquisition of Edwards. On the ECM side, we're also seeing an uptick in activity. John, Foxtons' IPO book build is underway, Royal Mail is set for a privatisation listing, and Bolloré's car battery business Blue Solutions has published its intention to float. Is this boom time for IPOs?
It would seem so. Confidence has certainly returned. Block trades of stock including G4S, ProSieben and Iliad in recent weeks have represented solid leading indicators for listing activity. If you look at the VDAX, the German Volatility Index, a sort of proxy for pan-European jitters, that's at 17.5, right in the middle of a 15 to 20 point sweet spot. Private equity is sat on investments made before or during the crisis. They need to exit. It's a good time to list.
And is there a bias towards certain sectors in those listings that are coming to market? Many of the European listings in 2013 appear to be in the real estate sector.
I think that was true. So far this year, we've seen listings get away largely where there's a defensive hub to the equity story. So you've had real estate stocks with predictable rent revenues. LEG Immobilien raised over €1 billion, and Deutsche Annington listed, admittedly after a bit of a false start. And these are clear dividend plays. Esure, the UK insurer, listed in March, and June saw enhanced annuity player Partnership Assurance get to market, both with regular cash flows. But Foxtons' IPO may signal a shift in investor appetite towards the less defensive names. It's, after all, yes, in the real estate sort of area, but it's an estate agent and a play on property price rises rather than rents.
And of the current IPOs, Royal Mail is the largest. How is that being received in the market?
The government is looking to sell a majority stake. Dealreporter analytics based on comps analysis suggests an equity valuation of £3.5 billion before applying an IPO discount. So in terms of how it's received, you can imagine a deal this size and this sensitive wouldn't be progressing to this point if they hadn't taken the temperature of the buy side during pilot fishing. That said, there are gremlins in the equity story. The pension funds are being lured with a guaranteed dividend of £133 million but for the year ending 2014. But after that, the group is only committed to a progressive dividend policy with no guidance on payout ratio, and it has to make investments the company in parcel delivery. Also, the Communication Workers Union remains opposed to the listing plan and is balloting for strike action.
Now, looking ahead to the end of the year, which potential listings are set to make some waves? We're hearing increasing noise about the French cable player Numericable.
Yes, we've reported it's looking to list by the end of the year. It has 1.7 million subscribers and 3 private equity names looking to begin staging their exit, Cinven, Carlyle and Altis. We've got the estimated equity value at €4.6 billion, again, according to Dealreporter analytics. There's a sort of embedded fantasy here that a listed Numericable could be on the radar of French mobile group SFR, itself likely to be spun off from CAC 40 constituent Vivendi. Now, pressure for that spin-off is thought to be coming from Vivendi's new vice chairman Vincent Bolloré, who himself, as you mentioned earlier, is looking to list his car battery business Blue Solutions this year. For me, really, in a way, there's perhaps no better indicator of the life of the European IPO market than that we have French names in the pipeline. The Paris listings market has been moribund during the crisis.
Alex, we're seeing lots happening in the telecom sector with Verizon, Vodafone and Cable Deutschland, and KPN in America, Movil. And in the telecoms technology space, you're looking at Microsoft's acquisition of Nokia's devices and services business. That's led to a huge jump in Nokia's share price. It's good news for investors, isn't it?
Yes, Nokia's up 60% now, so a lot of happy faces there. The company was facing some quite significant cash burn problems. Around $500 million quarter over the next year was due to be going out of the business due to restructuring at its telecom infrastructure arm, NSN. Nokia was also faced with having to pay down the debt that it took on for the acquisition of NSN, a half stake that Siemens owned. Now it's got cheap financing provided by Microsoft to pay back that NSN debt and a trove of cash. Net cash is going to be €8 billion once this closes.
So that leads to the question, what's Nokia going to do with all this cash?
Well, the board's being pretty secretive at the moment. It's conducting a review of their capital structure in the months until when the deal is completed next year. Now, they've got a few tasks ahead of them. They want to get back to investment grade. That's a 4-notch journey. They also need to figure out how much they want to invest in growing their remaining businesses. Then, they say, any deemed excess cash will be distributed. But there will be pressure. One top 10 shareholder mentioned to us that this deal will put pressure on the board to pay a dividend next year after they suspended it earlier this year, which some didn't like too much.
And so it's a big change for Nokia. What does the future hold for the company?
Well, the general chatter now is that Nokia should put NSN at its core. After all, it will account for a vast majority of Nokia's revenues. Questions of how NSN might look to expand are also circulating, and a few people have noted Alcatel's share price shot up on the day that this deal was announced as well, so that could be a target there, I guess. Nokia's mapping division here, which is basically Navtech, is the other part of Nokia's business receiving scrutiny. Here's big in the sat-nav space, and they've just signed some exciting deal with Mercedes about self-drive cars by 2020. I think that's pretty cool. Now, the line is the board itself won't know won't they sell here like the market is asking until their review is complete. So that should be first quarter next year, hopefully.
Thanks, John. Thanks, Alex. That's all from us. Thank you for listening.